Welcome to Catalyst Conversations, the podcast where we spark powerful change in women's wealth. I'm Hadriana Leo, a wealth coach, counselor, and strategist, and each week we dive into the conversations, strategies, and stories that help women confidently create the life they've always dreamed of. So grab your favorite bevy, settle in, and let's get started on transforming your relationship with money. This is Catalyst Conversations, igniting change in women's wealth. Let's spark the conversation. Hi, everyone. Welcome to another episode of Catalyst Conversations. I am really always excited to have my guests on, and this guest today is no exception. So please help me welcome, wherever you are watching or listening, do the hand claps, do the waves. Welcome to our conversation, Miss Keisha Johnson. Hey, Keisha.
Hello, thanks for having me.
Oh, you know you had to get here. You had to get here. It took you long enough.
But I'm here. I
You're
made it.
here, and I'm really excited. I am very, very happy to know that you thought it was worthwhile to be part of this conversation, because I think in our work together, I've seen so many places and instances where we're after the same goal. We really want to see people empowered. And you do it with your work, I do it with my work. So
Yes.
voila.
Yes.
It works out really well. Okay, so I like to start each episode with kind of like a saying or a phrase that you use that inspires you or that is relevant to your work. And I've heard you say this one quite a few times. Either we're presenting together or I'm watching you do your thing somewhere. You say this, if you always do what you've always done, then you'll always get what you've always gotten. Okay, did I get it right?
You're close, you're close. I mean, pretty much the same thing. The way I say it is if you do what you've always done, you'll get what you've always gotten. Right.
Yes. Okay, if you
Um,
do what you've always done, you'll get what you always got. Okay, break that down for us.
Well, for me, it's just, really switching up life. Sometimes we seem to continue to do the same things over and over again, and we're not seeing the results that we would really like to see. So we have to kind of take a step back and reset and really take a look at things in a different angle and see what can we change? What can we switch up to really accomplish the goals that we want to accomplish? All right. So we're going to be stagnant if we're continuing to do the same things and we see no progress at all. So we got to switch it up.
Yeah, for real. In fact, I don't know. I think it's Einstein that's credited for this quote, and someone will correct me in the comments if I'm wrong.
Yeah.
But the definition of madness is doing the same thing and expecting
Right.
a different result, right?
Yes.
Yes, and none of us want to be going to the loony bin anytime soon. So if we actually want to get different results, we need to do something perhaps we have not done
Right.
before.
Exactly. You hit
You
the
know
nail on.
what? That's deep. And I really appreciate you sharing that. Something tells me that that quote probably came out of some of your own life experiences. So, care to share?
Well, for me personally, I always have my hands in multiple things, right? And there's a saying, and you may know it. I can't remember right now, but master of if you have too
Hmm.
many things happening, right, then you become
Yes,
master of nothing, right?
right.
So for me personally, I'm always doing different things, always doing different things, and I kind of switch it up where just focusing on one thing, and this is where mortgage land came into play. And I think it's very important. And don't get me wrong, of course, you are able to, have your hands in more than one thing, but sometimes, it kind of your focus is not as direct. And you want to try your best to focus on that one thing that's going to really elevate you and take you to where you want to get to. So, that's where that came in for me, really. It's just, not having your hands in too many things because then you kind of get distracted on what the real goals are, and it can kind of set you off track. So just keep your eyes on the prize and keep focused as much as possible so that you're not all over the place.
Yeah, not all over the place. And then you know how to measure your goals. You know how to
Mhm.
measure achievement. I mean,
Yes.
you're doing this because I've had your cake. Thank you very much. And I think I'll be having more of your cake. She's an excellent baker. And some complex cakes too. And not just the cake, but the design as well.
Custom, yes.
Um, yes, absolutely. But that's not what you're sharing with the world. You focused in on your ability to help people change their lives with the experience of home ownership,
Yes.
and investing in real estate. So you've niched down, you figured out that this is what you want to do. How are you helping? Like, I'll tell you honestly, there are like a gazillion mortgage agents, mortgage
Mhm.
brokers out
Yes.
there. What makes the work that you do so different? What's the Keisha advantage?
Yeah, I like that, the Keisha advantage. I think it's, just having a genuine care for my clients, right? I do tend to get attached in the sense of really going in to battle, literally putting on my boxing gloves, right? And going in the ring with the lenders. I have a genuine care for each client. I do want to see them succeed. And I want to make sure that they actually get into that home that they so desire to get into. And it's not just about closing a file for me. It's really creating relationships with my clients. After closing a file, and whether if it's a job opportunity that comes up, I'm, sending that on to my clients, right? To with, where their children are concerned, summer jobs, things like that. So I want to always make sure to keep in contact with them and build that relationship outside of just, closing a deal and making it transactional. But the bottom line is I have a passion. I really do have a passion with helping, and that's one of the main reasons why I got into this industry, right? To help individuals and to help them to accomplish those goals. I want to take a bit of a step back, because for me, in terms of really narrowing down in this industry, when I actually started out in life, ECE is what I actually took in school, early childhood education.
Mhm.
And I always though I always want to work for myself, right? And when I had actually started out, I put that ECE diploma actually on a shelf
Oh,
for yeah for quite a long time, all the way up until 2017. All right. Now, for me, sometimes in life we do things and we don't see the impact that it will have later in life. So we may
mhm.
do it in that moment and it might not be of help in that moment, right? But it might be a bridge to something else down the line. And for
Yes.
me personally, that ECE diploma was the bridge to me kind of crossing over into mortgage land. And how was
Hmm.
that? All right. So I'll break it down. So I used to work at before and after school program at a school. And I'll tell you that when I went to Seneca College for ECE, there's only two placements I liked. That was the before and after school program and what do you call it again? In the senior kindergarten class. All right, senior or
Ah, right.
junior. Right. I didn't like the daycare. I really didn't. I didn't like to change diapers. I had three boys. I was like, that's enough. Right. So those placements was not for me. So when I was working at a 9 to 5 position, I was thinking, oh my goodness, there are clients that are calling and I can't really attend because I'm not on my watch. I'm on their watch. So I
Right.
said, Lord, how can you position me in some sort of employment where I would be, getting paid somewhat full time, but having the opportunity and the time to still build that mortgage career. And I went
Mhm.
on to Indeed and I found a before and after school program, and it was amazing. And they needed that diploma. So here
Yeah.
comes that diploma. I had to dust it off, literally blow off the dust off of it. And I had the diploma. I was able to show it, and they loved me in that interview for the before and after school program. And that is how I landed that position. So in that position, it was 7 a.m. till 9 a.m. So from
Mhm.
7 a.m. to 9 a.m., I'm at the school, have my running shoes on. And as soon
Yeah.
as that bell rang, I kicked that running shoes off. I put on my heels and I got in my vehicle and I drove all the way from Brooklyn and Whitby to Scarborough to the brokerage office. All right.
Wow.
And there was a cutoff time because I had to be back at the school, and that cutoff time was from 3 to 6. So I had to be back at the school from at 3 o'clock. So there
Right.
I was going back to the school from 3 to 6. But in between that time is where I built my mortgage career and was able to attend to the clients until I was able to go full time, right? So,
Yes.
sometimes you got to uncomfortable yourself now so that you could be comfortable later. That is a phrase, I'm sure there's many ways of saying it, but that's a phrase that I've kind of coined myself. So what is
Yes.
that? How can you uncomfortable yourself? What is it in life that you want to accomplish? For me, it was, not being all over the place and really focusing on mortgage land. And I found that bridge and I am comfortable with myself, but here I am today and helping clients and excelling in it. And it's a wonderful feeling to help out clients in this
You
industry.
know what? It really is. There, you're sharing all of these various things that you did, some ways of doing it that weren't quite what you wanted to do, but
Yeah.
still, I see this thread. I mean, we've been in each other's lives outside of the profession for years and years and years.
Yes.
We attend the same congregation. So I've seen the heart that is in what you do. And I'll just say to our guests who are watching, our audience who's listening, that thread of helping people goes through everything Keisha does. It is not something where she puts it on here and turns it off there. Keisha has a heart for helping, and you'll see it whether she is doing ECE work, which she has again put on a shelf, and maybe who knows,
Yeah.
may dust it off one day. But you'll see it when she's working with seniors and assisting them and helping, volunteering her time most of the time. And you will see it in her mortgage work. So when in professional settings, when we're working, Keisha, I've seen you really for real go to bat for your clients. So when I refer clients to you, I say to them, she's my bulldog. Like, yeah, let's go. And you tell the stories, you tell the client stories. And I think a big part of how you get to tell client stories is because you understand, you take the time to understand the client story. So I'd love to dig into, kind of the passion you have for mortgages. But I think in my experience, there's one specific home buyer experience that you kind of niche down on, and that is probably that positioning yourself to
Mhm.
get into the real estate market. Tell me a little bit about, why you're choosing that stage
Mhm.
as the one where you're going to really like dig in and help that person become a home buyer. Why that point? I mean, there's no transaction yet, so why
Yes.
there?
Yes. I mean, there are clients that I work with that we've been working together for 5 years, 6 years, 3 years, and it's starting out at that positioning stage, right? There's nothing worse than thinking you're ready. And then now you take the steps, to, of course, try to acquire that home. And then you get stopped in your tracks because you think, oh my goodness, I wish I knew this 6 months ago or a year ago. All right. So that's why it is so important to position so that when you're ready, you are truly ready. And that's
Yeah.
the position that I take with each client. I want to make sure that they are truly ready when the transaction starts. And of course, it's not that easy. We're in a time right now where home ownership, it's really not that easy. And I want to make sure that I take the time with each client from credit to closing. I actually have a monthly mortgage seminar and I call it from credit to closing so that the client they're ready with their mind, their finances, they're ready to go. So that is very important. We don't want to, I want them to feel empowered in that
Yes.
in that purchase, right? And let's be real, there are individuals who got into a home and they just kind of stumbled into it, right? They have no idea how they got there. Okay.
Me.
So even when I'm working with clients that it's not their first time purchasing, they're now moving out and purchasing a new home, the whole experience is new to them because they were not educated during the process. And so I do like to make my process as educational as possible, something that you can turn around to a friend or a family member and share that experience with them. So now they can potentially be empowered to purchase if they're not quite there as yet, but their mind starts to kind of work and get positioned for that purchase. So
Yeah.
positioning is very important. It is.
Yeah. Yeah, you know what? There's also the flip side to why it's important to position yourself, because I've seen it with my clients. I've seen these individuals who, because either they're afraid or they just count themselves out or they're just not educated, I've
Mhm.
seen several people who actually can have
Yes,
the experience of home ownership, but
yes.
because they have not done the calculations, taken a look at what's happening, they have not explored all the opportunities out there, they count themselves out. And I'm
Yes.
like, wait, we need to position you for home ownership. And it's not until you have that exploration that you're like, you can own a home. And
Hmm.
when I do my work, we're not owning a home and can buy bread or we can
Yeah.
or we can have fun. When I say to a client, you can own a home, I am putting quality of life factors
Mhm.
into that statement as well. So
Yes.
we need to be positioning ourselves so that we understand where we are
Yes.
and we understand what the next steps could look like. So I am there with you,
Hmm.
positioning yourself. And you mentioned people who kind of stumbled into home ownership. Let me tell you, the first house we purchased, we went out with a realtor looking for a rent to own opportunity, turned around, and then boom, we had a house.
Yeah.
We bought a house from a builder who had inventory left over. So we never, and the
Wow.
builder gave us, provided the mortgage. Our down payment was $10,000.
Oh my goodness. Yes.
So we really did not, we were homeowners and we still didn't really understand the process. We
Hmm.
still were not positioned for home
Yes.
ownership. And as a result, it was a bit of a bumpy ride. So let's talk about how you help position your clients for home ownership. And your seminars, your monthly seminars is from credit to closing. So let's start
Yes.
there.
Hmm.
Um, you help people deal with credit. Now, please explain. Tell me how that helps them position for home ownership.
Indeed, indeed. So, I mean, of course, credit, I always say credit rules, right? Definitely. It can be the make or break, but it doesn't have to be the make or break. And when I say that, what I mean is, sometimes we think that, our credit is not in line to purchase a home. All right. Now, having the best credit, of course, is going to put you in the best position to, of course, secure the best rate. But having bruised credit, it doesn't necessarily mean that you're not going to qualify for a mortgage. I've had clients that have double bankruptcy, all right, that have been able to purchase a home, all right. But we start off with credit because we want to make sure that your credit is in the best position. So of
Mhm.
course, if you're not quite there yet and ready to purchase a home, this gives you the time to get everything in motion so that you can definitely get there and put your credit in the best position, right? A simple thing as overextending on your credit, right?
Yeah.
Sometimes, of course, let's say you have a credit limit of a 500, okay, and you're overextended on that, you're at 480, you're maxed out, almost about maxed out. That's putting a strain on your credit. All right. So these are the things that I go through in the presentation as to kind of break down, exactly how you can make sure that your credit is in the best position. So this is where I start, of course, with the seminar. I do also have a 5 days to home ownership challenge that really kind of breaks it down a little bit more with regards to, how to get your credit in the best position. But you want to do that. You want to set up your credit so that when you go live, all right, and when I pull that credit, what I send over to the lender is going to put you in the best position so that you could land the best rate, which is obviously going to trickle down to that monthly payment. So that's where the process really starts. All right. And once we start doing that, then we kind of go into running those numbers. The presentation goes through, of course, running those numbers and understanding what your affordability is. And rightfully so, as you say, there's some clients that really don't think that they're ready. And when I run those numbers and they're like, oh, actually start. All right. So it's really having those conversations. For me personally, even starting out early, no one really took the time to sit down and share with me, what home ownership looked like. And so I had this thought in my mind that, oh, I don't have the down payment. And when you say 10,000, there was even a time where it was zero down payment. All
Yep.
right. There was that time as well. And a lot of us weren't educated enough to understand the steps that were needed to be taken so that we could actually get in. And so what I want to do and the platform I want to create is so that you get that education and that you see that in fact it's possible for you. And even if it's not right now, it's not the immediate, that doesn't mean it's not going to be possible. You just have to just keep your eyes on the prize, put the things in place so that you can get there. Nothing happens before it's time.
Yeah, definitely. In your experience, if you have a client where the credit is really placing them in a position where, they're not attracting a really great mortgage product. So I'll say this, there's a mortgage product for everybody, right?
Yes,
There's
yes,
something that'll take care of the worst credit
yes.
and poor income and all the rest. There's a product for everybody. But the truth is, sometimes the terms of these products are
Hmm.
just not attractive.
Yes.
They seem to really be, unnecessarily harsh. So
Hmm.
you have this client that's attracting a really not good mortgage product, and you're
Yes.
thinking to yourself, we can do better. How long would you say it would take to bring that credit component to a place where they can be at a place to, get a better product? What's the time frame? And I know this isn't for everybody. You're not giving
Yes.
anything in concrete, but what are they
Yes.
looking at for when can this get better?
You know what? It could be anywhere from 3 to 6 months, right? In terms of really starting to see some improvement with your credit. I've had situations where, clients, let's say for refinancing, for instance, and clients are paying out debts or their debts were overextended, all right?
Mhm.
And they needed to pay out some of those debts to get those balances back in line. Once they pay them down, right, you can really start to see some recovery in that credit, right? As early as 3 to 6 months.
Mhm.
Okay. So it's possible. It's possible.
Yeah.
But of course, you have to have the finances to be able to do that and bring that down so that it's a little bit more favorable in your a little bit better in your court. But another thing that I really want to, hop on here is when it comes to you know, you may not get the most favorable rate, but if you're in a position where you can get in, all right, in the market, okay, you may want to take advantage of that situation. Now,
Mhm.
if your credit is, not the best, and you're not going to get the best, of course, monthly mortgage payment, but based on the interest rate, what you really need to ask yourself is, any credit sorry, any interest rate, bottom
Mhm.
line, that you receive based on that credit. Can I sustain the monthly mortgage payment? All right. That's the real question that you need to ask yourself because, interest rates are like a variable. They go up and they go down. All right. The term, there's always a term, and the term always comes to an end. All right. And then you renew. And so you just don't want to be in a situation because, you didn't get the best rate at that time, but there was an awesome opportunity for you to kind of get into a property right now as we stand right now, it's actually a buyer's market. All
Yeah.
right. And so if you're able to secure a property, right now or any time where, you're able to at least sustain that monthly mortgage payment and you can really ride out that storm for a little bit in that term. And then by the time that term ends, and hopefully by God's grace, rates are a little bit lower and you come up for renewal, then you capitalize on, of course, the lower rates at that time. Because you just don't want to be in a situation where you look back and you think, oh my goodness, like rates are pretty decent right now. And we had a grand opportunity to take advantage of purchasing that home, but we're so stuck on the rate at that time. All
Mhm.
right. So if you're able to kind of overcome that, but by all means, I completely understand if you really take a look at your finances and you say, you know what, it's going to be a strain. So we got to take a step back and
Yeah.
just position. It's
Yeah.
okay. It's okay. But if you're able to, don't let the rate, don't let the fact that you have, as I said, I've had a client who's had double bankruptcy. They actually, a few of them actually came in on the private side. And when we think of private, those rates are not the best. All right. But, they had an exit plan. They had their eyes on the prize. And today they are with, with a prime lender. Okay. So there are opportunities. And as you said, rightfully so, Adriana, yes, there are products there, for everyone. But at the end of the day, it comes back to what you can sustain, what you're able, to balance with regards to your finances.
Yeah, one thing that just came to mind right now. Our credit reports
Mhm.
really tell a story of the past.
Yes.
What's on your credit file might be showing, you know, mistakes or
Hmm. Hmm.
missteps or, you know, immaturity. It might be
Yes.
showing things that, you maybe a circumstance that you just had to fight and you made
Yes.
it through that situation or what
Ex-
have you.
Yep.
Our credit reports do not define us,
Mm-mm.
and
Mhm.
it does not tell the story of the lessons we've learned and
Yes.
that we're applying for the into the future. It
Mhm.
doesn't tell us about our potential and the new mindsets that we've adopted. So anybody who's looking to journey into home ownership, know that if your credit isn't perfect or if it's bruised, that is a story of what was, and
Exactly.
you are positioning yourself by making great choices now and into the future to
Yes.
really tell a different story. And that's one of the things I really love about how you manage your mortgage clients. You hear the story and
Mhm.
you can tell the story in a way that shows heart, determination, and a future focused plan. So that just came to me right now. And I'm like, yes, that's exactly Keisha. That's
Mhm.
you doing the caring and doing and listening. And then
Yes.
telling that story about what's possible. Okay, we can stay on credit for a long time. I do accelerated credit repair and debt elimination as part of my work. And when
Yes.
we're talking credit repair, that's one facet of the
Mhm.
home ownership venture. Let's
Yes.
talk a little bit about that down payment. My
Mhm.
friend, let me tell you, scary, because where I don't know where all of our guests are watching or listening from. I mean, you could be anywhere in the world. We're dealing with the markets. This is 2025. This is March 2025 as of the time of this recording. And
Yes.
we are in the Greater Toronto area, in the province of Ontario, in the beautiful land of sovereign Canada. And home affordability is a joke right now. So down payments for homes is like through the roof.
Yes.
How are you kind of maneuvering around the down payment requirement for mortgages?
Hmm. Yeah, so of course, based on the values right now, you said earlier 10,000 was the down
I'm
payment at the
laughing.
time, right? And of course, gone are those days, depending on where you are. Yes, we're in Toronto, right? And the Greater Toronto area. So down payment, of course, can be very hefty. And you do have, of course, privileges to that. Well, I don't want to say privileges. I mean, that 5% down highly depends on, your credit, right?
Yeah, yeah.
The better, of course, that credit is going to really secure that 5% down, or that could change from 5 to 15 or 20% if the credit is obviously not the best, right? But
Mhm.
5% is basically what gives you that minimum down payment, and that's 5%. So we have to keep in mind that with property values that are over that 500,000 mark, right? Any values over 500,000, that 5% now changes to 10%. All right. So what happens is that, for the first 500,000, that's calculated by 5%. Okay. And anything beyond that amount, right? Let's say it's a $700,000 property. The first 500,000 is calculated by 5%. And then the 200,000 is calculated by 10%, right? So that's basically how it is. And based on the fact that values have increased, the regulators, of course, those in mortgage land of come up to par with that and understand that we need to, of course, put in place a down payment that's going to be manageable for individuals. So before, if you're purchasing a property over 20, over 1 mil, it would be 20%. Okay, but now that 10% applies all the way up to 1.5 mil. So it gives you a little bit of an ease. Okay, now with regards to the down payment within itself, of course, it can come from your own resources. But what I've been finding is that, I've had a lot of, young people, who are purchasing, or it's just family members that are assisting, whether it be your mother, your father, your brother, your sister, that's helping with the down payment. So gifted down payment is allowed. Okay, so I am finding that a lot, where there is help from parents and siblings with regards to purchasing a property. Okay, so you definitely have to try your best to put towards and save up that down payment. And it is quite hefty. You are correct, it's hefty, but it goes back to positioning and just understanding that if this is the value that I'm looking at, this is what the down payment is going to look like. All right, and these are the things that I need to put in place. You have the RSP as well. If you do have an RSP, you're able to obviously tap into that, and you're not going to be taxed as because you're taking it out. There's a tax portion, of course, but it's not as hefty because you're taking it out for a home purchase, right? But it is possible, as I said, but you have to just start to put the things in place, whether it be that some individuals, they have a part-time job. All right, that's helping them to come up with that down payment. So keep in mind, 5% is what we're looking at. But anytime, of course, that we go over that $500,000 mark in terms of a purchase price, then we're looking at 10% on the balance of that. Other than that, if you're purchasing in Alberta or some of these other areas, 300,000, of course, we'll see that the down payment is significantly less. But if you're here in Toronto and the Greater Toronto area, and you can't disconnect, you can't see yourself disconnecting and just, moving to another province, we're going to have to accept it. And I'm finding that. I think that a lot of individuals are realizing, okay, some are waiting for that big crash. Okay, that big crash in the market. Now, I will say, I say this with a grain of salt because everything is so unpredictable that you just never know. Okay, but aside from that, we are basically on that leveling off of where property values are. So we're not going to see that big dip that we are hoping for. And maybe some have been standing on the sidelines and hoping that's going to happen. I think individuals are more coming to terms with, okay, this is where we're at. These are the values that we're going to have to deal with. All right. So let's get ourselves in gear and understand that if we really want a home ownership to be a part of our journey, then, this is what we're going to have to deal with and start putting these things in place to make it happen.
Yeah. In my experience in this profession, the only time I've seen a home buyer go wrong with actually stepping into the market is when they're driven by emotions first. When it's an emotional buy, and then you forget, like you're not listening to the mortgage person, you're not listening to the realtor, you're not listening to the insurance person. You're just like, I want it.
Yes.
And you go into those bidding wars, and you really pay outside of what is everyone's advice. And you go in. But as long as you have a good team of professionals helping you out, I have not actually seen, well, I guess maybe I've actually seen anyone come out worse.
Yes.
After having experienced home ownership. So I think however you can make it happen, and again, I'm big on purposeful living, a good quality of life, balance, and putting priority on the important things in your life. As long as you can maintain that, do it. Step into it. And I know the bank of mom and dad is being accessed more and more to get those down payments. I actually sent my family a video because I'm looking at, the pressure on my children to become homeowners. And I'm thinking, I've got young daughters. I'm like, they certainly, I don't want them to be financially dependent on anybody, except the Lord. So I want them positioned to be homeowners because it's a great tool for generational wealth building. But the reality is, I'm going to help them. And I've resigned to that. In fact, I shouldn't even say I've resigned to that. I have stepped up to that so that they
Yes.
don't have the burden that becoming a homeowner can sometimes place on our young people. I
Yes.
literally sent them a video about how we can split my current house and make four. I'm like,
Yeah.
yes, we can do that. Because the lot is big, tear down the one big house and make duplexes. They do it
Yes,
all the
yes,
time. And
yes,
who needs all this space? And we get our kids' foot in the door.
yes,
And
yeah.
whether it is sharing our current living spaces with our young people, sharing the knowledge that we have with our young people, or helping them make that down payment, we do what we got to do, right?
Yeah, very
Yeah.
true.
Yeah. So we've done the credit, we've looked at the down payment. Let's talk about the money that's coming in, because if we're not earning, we cannot service a mortgage. Let's talk about the income requirements.
Yeah, so the income requirements, this is very important and key. All right. So when it comes to it, you want to make sure that here we go back again to positioning, right? I've had clients where, whether it be they're in hourly, positions, it's so important to understand, how you qualify when it comes to your income. If it's salary, I always say that word is bond, but with salary, it's bottom line, your employment letter is going to say your salary. You've been here for so long. This is when you started, and this is your position. It's finished. All right. The lender is going to call your employer, verify that you were salary, and we're good to go. When it comes to hourly, however, right, and hourly kind of ties into contract work as well as self-employment. The qualifying is a little bit, it's not as straightforward as the salary. What we use is a 2-year average. All right, when it comes to the hourly. And so, I've had clients where they say, oh, I made 70,000 for the year. Okay. And then they let me know that, they're hourly. I said, okay, so if you're hourly, what did you make last year? Oh, I made 50,000. Ooh, okay, so actually we're gonna have to average those two out, adding those two numbers together and dividing that by 2. So now it's actually 60, right? So it's not as what they think. They may think, oh, last year I made 70. And if the previous year you made a lower amount, a higher amount, and the present year is actually a lower amount, the lender's actually going to use that present year. All right. So it's no longer the average out of the 2 years. So it's so important. So when I'm dealing with, let's say, nurses or anyone who's having hourly income, I encourage them, you really have to make sure that you stay on top of those hours, because, one low year is going to really, affect your affordability. So it's very important. So if we're dealing with salary, as I said, it's very straightforward. If it's hourly, you have to make sure that you have those hours. It's really reflecting on that pay stub. And it's one thing if if you see that the employment letter may show that these are the hours that you have, but then when you look on the pay stub, it's completely lower. So, and that's a conflict. Okay. Now, if you are an hourly individual, what you have to keep in mind is that, let's say you just started that position, okay, and you're hourly, you don't have a 2-year average, okay, and so you don't have a 2-year average. What are we going to do? We can very easily not have an income to verify based on that. But what we can ask you to do is, if you can get the employer to put guaranteed hours on that employment letter, if it's possible, if you do get those hours and they are guaranteed, there shouldn't be any issue for the most part, of course, having that verbiage on your employment letter. Mind you, if the hours are not guaranteed and the employer says, sorry, we can't guarantee you those hours, then it can't go on that employment letter. And so very easily we can have an issue based on the fact that we don't have a 2-year average and we don't have the guaranteed hours on the employment letter. All right. Another, thing to keep in mind is that if the previous employment is in the same field, and so you're just starting out at this new position, maybe 1 month in, but the position you had before was in the same field, I could always, of course, lenders can make exceptions sometimes, right? And this is one of the exceptions that they do make in most cases, where, okay, yes, they just started here, but they were in the same position before. Can we use the T4 from the previous employment? All right. So those are the things, to really consider and understand when it comes to employment. Of course, this is key in regards to, making sure that you qualify. The higher income you have is going to give you that higher affordability, that higher purchase price. So you want to make sure that that is in the best position as possible. So
Mhm.
if I don't say anything else, salary straightforward. But please, if you are hourly, take note to that and understand if you're self-employed, we're looking for maybe the last 2 years average. Okay. If we're qualifying you on the alternate side, and take note to this, the alternate side is not private lenders. They're not private. They're just the alternate side where they're a little bit more flexible on the lending guidelines. Of course, there's a trade-off, which means that the interest rate is a little bit higher. But if you're self-employed, we could use the last 12-month bank statement to take a look at the income coming in, and that's what we'll use. It's called stated income. All
Right.
right. It's called stated income. So these are the different ways of qualifying when it comes to your income. Of course, everybody's individual situation is different. And once I get that client's information, then I'm able to kind of go through and see, exactly how are we going to qualify them. Are they hourly? Are they self-employed? Are they salaried? And we kind of take it from there, and I run the numbers and let them know what that affordability is based on the income and the debt load.
Yeah, that's right. And back to that credit report again. So it's almost like you're taking all of these factors, mushing them together, and as saying, how best can
Mhm.
I set up that home ownership experience for this individual? And
Yes.
then putting that plan together to deploy and to get them on the road. So my guess would be, as the mortgage broker, as the one who is looking at that product, would you say that you're the first stop on the road to home ownership?
Oh, yes.
Yeah.
Yes, 100%, 100%. I mean, you don't want to go through the motions with a realtor. You're wasting their time, you're wasting your time. You see a property, and when we talk about getting your emotions all involved in it, right? And you see it and you absolutely love this property. And
Mhm.
now, okay, it's time to get that mortgage firmed up. It's time to get that commitment. You're doing it backwards. You now come to the mortgage broker and get those numbers, in line, and kind of run down the income and everything like that. And you realize, uh-oh, you
Oh
don't
dear.
actually qualify for this particular purchase value. And so,
Right.
yes, it's very important. The first step is to align yourself with a mortgage broker, or even if you're accessing through a direct bank, right? You want to make sure that you're at least getting some sort of pre-qualification, so that you
Mhm.
know exactly that you are ready to go. And just, very quickly, when we're talking about pre-qualification, there's pre-qualification and there's pre-approval. All right. And we have to
Mm.
understand that when it comes to pre-approval, it means absolutely nothing. All right.
Right.
Pre-approval is merely just a rate hold. And we have to be very careful for that. So when I use that verbiage pre-qualification, it's me pre-qualifying you. Okay. It's me running those numbers and making sure that I'm coming in as close as possible, being as in line as possible with what your affordability is, so that I can now give you that number and you take it to the realtor to say, okay, this is my purchase price. This is how high
Mhm.
I can go. Now,
Right.
when we're doing a pre-approval, the lenders don't necessarily look at your documents. So if you go into the bank, for instance, and you get a pre-approval, it's not always that they're looking in detail with the
Right.
at those numbers. It's you go live now, and that's when you realize,
Ooh.
uh-oh, okay, we can't get the commitment. I've had a situation, like I had a few situations like that, but one in particular that I can remember was with a client. They're working with me, and then they went to the bank, all right, and they got a pre-approval. They took that
Mhm.
pre-approval to a new build and put a deposit on a property. And when they went back to the bank now, guess what? Now they're
Oh
really running the
no.
numbers, and they can't get that commitment. Right. In fact, the only way that they're able to get the numbers in line is to use whatever savings they have to pay down the debts, so that the numbers will align. Well, guess what? That savings is actually the down payment.
Oh.
Right. And they had a pre-approval. All right. So of course, the client came back to me and said, Keisha, this is what happened. I said, what did you do? They said, I know. It's all good though. You know what I mean? When I work with clients, I always say, At the end of the day, I want to make sure that you're working with who you feel most comfortable with. I
Mhm.
don't hold clients hostage, right?
Right.
And there's always, that open door type of thing. And so therefore, they came back and they said, Keisha, we need your help. And, I was able to, of course, get them, through that door based on the lenders that I was dealing with, where the flexibility was a little bit more there. Their debt load, of course, was a little high, but there's flexibility in the ratios with this lender. So we were able to push that deal through. All right.
Right, right,
So
right.
yeah, so I mean, it's there are little hiccups here and there, but I'm here every step of the way, right, to help. I'm not going to say there's not going to be bumps in the process. I tell you, I always say to clients, it's short of a blood sample sometimes
Oh my God.
that these lenders that these lenders are asking for, right? But at the end of the day, I want to make sure that I try to smoothen those bumps as much as possible and set the expectations, because I just don't ever want a client to come back to me and say, hey, you said this, but you did this. No, I
Right.
want to set that expectation and make sure that we're in one accord and the process is as smooth as possible.
Yeah, and I'll say this too. This process and the assurance that you can provide clients hinges heavily on open, honest conversations.
Yes.
Like no judgment is going, like Keisha's not going to judge you for that thing you did in the past or that thing. Don't hide anything
Yes.
when you're having this pre-qualification conversation, because it will show up. Okay? Don't bother trying to hide it. In fact, the sooner you place everything clearly and open on the table,
Yes.
the
Yes.
sooner you have the best, most clear picture of what home ownership could look like for you. I love this. In fact, I've always just thought pre-approvals are a waste of time, but now
Mhm.
here we talk about pre-qualification and how in depth they go.
Yes.
I think I will push more clients to get that pre-qualification instead of saying, oh, forget about the pre-approval. Well, there's so much I can see when I'm running client numbers, but if
Yes.
you can actually go and get access and do the
Mhm.
pre-qualification. So that's a fantastic differentiation to make. So thank you
Yes.
for sharing that. Before we wrap up, I want to
Mhm.
quickly talk about your work on the real estate investing side. Now, I know you're not out there. It's not a big part of the positioning stage, but
Yes.
you have helped us with our principal residence as well as our investment properties. Tell us a little bit about what options look like if someone is wanting to get financing for an investment property.
Of course, yeah. And I mean, investing is definitely a very good thing, right? And I do have, multiple clients that do come and they're looking for investment properties, right? I do my very best, to create those opportunities for clients. And there's a lot of opportunities that are out there. There are a lot of opportunities that are out there. And when we're looking at investment, properties, of course, there's a few things that we want to look at, and that is, of course, seeing how that can fit into your portfolio. What's your long-term goals when it comes to an investment property? Okay. And if you're looking to purchase an investment property for, whether it be running it as a rental property or an Airbnb, you really want to take a look at the numbers first, looking at that area. I always tell clients, okay, if you're going to purchase a property that is an investment property, you want it to be a rental, speak to that realtor and really find out what is the estimated rental income in that area. Okay,
Mm.
because we want to run that against what the potential mortgage will be,
Right.
so that we want to make sure that there's going to be some cash flow, and hopefully some sort of cash flow. And you got to look at the bigger picture as well, because with the rate increase that we've experienced in the last few years, keep in mind that there are some investors, right, that are coming out of their pockets right now, because when the renewal came up, of course, the interest rate, they renewed in a rate that was, woo, and that
Right.
little cash flow that they might have had, they may be breaking even now, or they're not getting any cash flow at all. So you
Right.
have to take a look at that bigger picture and understand that during that investment journey, there might be situations where the tides will turn. and
Yeah.
you're ending up having to come out of your pocket. And does it make sense? All right. Because the whole idea is for an investment property, you want to make sure that for the most part, for the
Mhm.
great journey of it all, that you are leveraging other people's money, all
Yep.
right, so that the investment makes sense, so that there is a cash flow that is happening. So 100%, I do work with clients that, of course, they are looking to invest in property. Some clients already own a property. The main thing that we have to understand is if you already have a principal resident and you're looking to branch out and get another property, the one thing that you want to keep in mind is that I need to factor in both homes now. All
Yeah.
right. And so therefore we have to run the numbers based on the principal resident and also now us taking on a new property. And so
Mhm.
can your income now sustain both of these properties? That's key. And when we're talking about the monthly rent, how does that monthly rent affect, the whole equation? Not all lenders, most lenders actually don't use the full rent as income. When we're talking about the A lenders, 9 out of 10, they use actually only 50%. So essentially, whatever cash flow that you might be receiving, it might not be something that we can use because based on the percentage that the lender's using, we actually don't have a cash flow. All right.
Right. Right.
So these are the things to keep in. So some may think, I don't understand, the property's taking care of itself. All right. It's taking care of itself in the sense that, of course, you are getting that cash flow, but when you're looking to purchase a new property and use that investment, income as the rental income as a part of your cash flow, it's not always going to be the case,
Right.
depending on the percentage that the lender is using. Some use 80% on the alternate side, right? So it highly does depend. But I do believe that having investment property is a great thing. It's creating a legacy, not just for you, but of course for your children. All
Yep.
right. You want to make sure that you're leaving something in place, if at all possible. And as you
Mhm.
said, of course, we're in a time where homeownership is not that easy for
That's
our
right.
our children. It's really not. And if we can maybe try to do something that's going to give them a little bit of a boost, all right, having an ability to invest in a property is a great thing. For on another angle as well, in terms of retirement, okay,
Mhm.
this might be an avenue where this is going to assist you where that retirement is concerned, whether you're keeping it as a monthly cash flow. Maybe you have that rental property and for the most part it's paid down, the balance is low, and you actually have a cash flow coming in. Or
Mhm.
you reach a stage in life where you say, hey, I'm going to cash out on this baby, all
Yep.
right, and I'm going to reap the benefits of it. Okay.
Right.
So it's so important. And even having that investment property, there's good debt and there's bad debt. All right. So you can definitely refinance that property and go again, take that equity
That's
out of the
right.
home and go again. And that is what
Yep.
you call good debt if you are utilizing it, properly.
Yep.
So it's a great opportunity, investment with investment properties. And I'm always happy to help individuals that are seeking to go in that direction, because I do believe that there's so much that you can get out of it if it's something that is something that you definitely want to move forward with.
Yeah, definitely. And I mean, why it's you hear the horror stories about the ones that have gone wrong, and I've
Yes.
lived some of those. It's not a
Hmm.
horror story, but it certainly didn't go the way you thought it would. But I remember what you said, you have to uncomfortable yourself
Yes. Yes.
before you're going to live that comfortable life.
Hmm.
Every experience that we're going to have, we can choose how we see it. We
Yes.
either win, and I'm going to credit Cheyenne O'Driscoll with that, who says, you either win or you learn. You
Hmm.
either win or you learn. And that makes every experience a positive one. That's
Yes.
not to say it's not hurtful. That's not to say it's not a big challenge. That's not to say it doesn't like hit you at the core, but the perspective of win or learn allows you to look at real estate as an
Hmm.
opportunity either way. And you're going
Yes.
to take the time to set yourself up to
Hmm.
win. And if you don't win, you've done the due diligence. Like, we can't control the market.
No, no.
We
Yes.
can't control government policy. We can't control which party is in leadership. One
No.
little vote makes a difference, but it takes a lot of one little votes to come together. So
Exactly.
we need to do the best we can with the information we have and
Mhm,
use the professionals that can support you winning. And if
mhm.
you have any intentions of homeownership, real estate investing, you need to reach out to a mortgage agent, preferably Keisha, because you really get positioned to win when we do that. So, Keisha, I am so thrilled. I think we need another episode to talk about the investing side of things because
Yes, that's
that's
a whole
where
other.
I'm really excited. I see so many opportunities. In fact, I fully expect that my kids will own properties to rent before they
Mhm.
own properties to live in. And
Yes, I
that's
love it.
part of the strategies that we're exploring, so that they can actually get the house that they really want when they're ready to move out and
Mhm.
their thing. But I think real estate investing is a really great avenue to, you know, get that generational wealth supercharged. You know what I mean?
Yes, yes.
Yeah.
And I mean, when you speak, just very quickly, when you speak about, the kids, I'll tell you a quick story of a young man. It's somewhere in Ontario. I don't exactly remember where, but it's when I was at the before and after school program. I always like to make my activities and everything very educational, once again, right?
Mhm.
For the young people there. But I told them the story of a young fellow. He was about I think it was around maybe 10 years old when he had actually started out, and he used to do little things in the community to earn funds. And when he got to a certain age, he actually was able to purchase a property. All right. And in purchasing that property, of course, it went in his parents' name because he wasn't old enough. But he would be the one collecting the rent. So he'd go, imagine this little boy knocking on the door, right? And collecting the rent because he owned that particular property. When he reached
Not
the
just
age of,
one.
it was not, oh, so you know the story. Okay.
Yes.
Yeah. Oh, okay.
So he
So
was
there you
14
go.
when he got his first property. And this
Oh,
isn't far away. This
yeah.
happened in London, Ontario,
See.
which is what, 3 hours from where we're sitting right now.
Hmm.
Um, Absolutely. What an inspiration.
Yes. And so, the whole idea was at that very young age, just kind of planting in their mind that it is possible, no matter how young you are, there are things that you could accomplish in life. And if you really position early, right? And look at that young boy, look how young he was, but yet he was a home owner. All
Yes.
right. And I'll finish with this when it comes to our mindset, just overall, and accomplishing anything in life, whether it be home ownership, whether it be getting in on the investment side of things, right? There's so much that we can do. He's an athlete. It's an athlete, and I can't remember his name, but at 9 years old, he actually wrote a letter to himself. And in that letter, he congratulated the 21-year-old self that he would be winning a gold medal. All right. So imagine this. All right. When he got to 21, he actually did win that gold medal. And he opened up that letter because it was sealed. And he read that letter to himself, congratulating himself. You did it. You made it. But imagine from 9 years old,
Wow.
really the mindset of that young boy from 9 till 21. You have to know that every single day was intentional in
Yeah.
making it to that goal. So, what are your goals in life? I think this is what we really need to kind of hunker down on. What is your goals in life? If it's home ownership, what are you doing to put things in place to get there? If it's purchasing investment properties, building your investment portfolio, what are you doing to get there? All right. Today is the first day of the rest of your life. There might have been some discouragements, there might have been some pitfalls, but guess what? Get back up, because the only person standing in your way is you. Once you get out of your way, then and only then will you truly be on your way. And it is possible. So make it happen. It's possible.
I feel like standing up and cheering. Keisha, what a fantastic way to wrap this up. Thank you for that phenomenal encouragement. And thank you so much for sharing your immense knowledge and experience in the space. Your passion is spilling out all over in listening to you speak. And I want everyone to know how they can reach you. Where can they find you on the interwebs, or how can we get in touch with you and access your knowledge?
Yeah, for sure. So you can definitely reach me on Facebook at Keisha Johnson. Also at RTS Mortgage Financial. I'm there on Facebook as well as Instagram, RTS Mortgage Financial as well. And you can see me on YouTube. The channel is Eye on Mortgage. That's Eye on Mortgage. And my website is www.rtsmortgagefinancial.com.
All right. Well, I know I'll be seeing her, like legit, like I'll be seeing her.
Yeah.
Um, but I certainly hope that this is not going to be your last visit. I hope we can find some time to come again and we can share some more. And definitely to those of you who are listening or viewing, find her on the interwebs, access that seminar, go in there and learn. Like I said, no judgment,
Mhm.
no expectations. Keisha really just cares about people, and that's how she approaches every interaction. So get out there, go in, have a word, have a conversation, or just take it all in. I'm really happy. Thank you, Keisha, for being here.
Thank you for
And
having me.
to all of our guests, this is not the last time you'll see
No.
her. Be sure that you tune in. Make sure that you access all of the great resources that are available to you. And I will see you. Thank you for joining me today on Catalyst Conversations. I hope this episode sparked something powerful to help on your journey to building wealth confidently and unapologetically. If you love today's conversation, be sure to subscribe so you never miss an episode. And if something resonated with you, I'd love to hear about it. Let's keep the conversation going. Until next time, keep moving toward your goals, stay empowered, and continue sparking change on your wealth journey. This is Hadriana, and you've been listening to Catalyst Conversations.